embedded finance, buy now, pay later that we're interested in. So that is a good example of something that fits our thesis. And more recently, we're seeing a lot of companies that are doing this when it comes to businesses purchasing large ticket items such as software or office equipment and offering the same types of resources that have been in the space when it comes to buying shoes or electronics online.
All right, this is another episode of the Form Your Own Pack podcast from Founders Pack. My guest today is Lucas Timberlake from Fintech Ventures Fund. Lucas, how are you doing?
Pretty well. Thanks for having me.
No problem. We're excited to talk to you and learn a little bit about Fintech Ventures Fund. So I guess to start, for people that don't know, who is Lucas Timberlake?
Sure. So I started in investment banking at Bank of America, Merrill Lynch, right after the merger. And so it was an interesting time to be involved in financial services. And fast forward, long story short, worked at an infrastructure fund, and we were buying parking companies and putting in mobile payments and reservation technology to that. And through that, actually met my partner on the firm that I helped co-found. It's called Fintech Ventures Fund, and adequately named. We invest in early stage fintech and insurtech. So I spent my entire career in financial services and now have what I think is one of the more exciting views within the space, which is investing in technology that's either helping legacy financial institutions undergo digital transformation, or certain companies enter spaces that banks and insurance companies can't serve due to high fixed costs or regulatory reasons. So that's us in a nutshell.
Very interesting. So would some of them kind of be along the lines or the alley of, like, say, a Plaid, or I'm trying to think of some other companies in that space? Like, what sort of, they're creating more like web services that would unlock things that you can't normally get in a traditional financial relationship.
So Plaid is definitely one of the examples, and they, for a lot of people, connect your bank account and or other financial institutions to your brokerage, or you pretty much use it for a variety of things. So that is an example of one of the companies that we're interested in.
Oh, okay.
For us, we are looking before Plaids become Plaid, for lack of a better cliche. So we're looking for early stage technology companies that have a similar thesis or idea to a Plaid, but we're really focused on banking, capital markets, lending, and insurtech. And within that, there's several different themes. Something that we're interested in currently, for instance, is how do you embed financial services into other workflows at the point of sale. So when you're, buying something else, maybe you could offer someone a loan or an insurance product, and that actually helps reduce the friction of these naturally, you could call them cumbersome transactions. And so that's kind of one of the areas that we're interested in as well. But Plaid, for instance, bringing it back to what you mentioned, would be one of the companies that would help people get underwritten for one of these loans that's offered at the point of sale or something like that. So definitely.
And I've seen certain trends, not to get off topic, but I've seen certain trends, for example, around, and I feel like they're API based, like, buy now, pay later. And I see a lot of those types of things. I see others around transactions. What are some of the areas that you're excited about and that maybe you're investing in?
So we've invested in a company that is in the buy now, pay later space, but it's a little bit different from some of the ones that you might think about when you're buying something online, such as Affirm, Klarna, you name it. So one of the companies we have, which is doing point of need, as they call it, lending, is trying to help home improvement contractors reduce the friction involved when it comes to undergoing a renovation for a homeowner. So
Okay.
they can embed this company Moment software into their workflows and offer the customer 0% or very low APR financing for a large project as well. So we're looking at it in that area. And then on the back end, the loan is actually sold to a community bank, which doesn't really have the relationships or resources to originate the loan themselves. And so, for lack of again, better cliche, it's a win-win for all parties involved. And, that's one area of embedded finance, buy now, pay later, that we're interested in. So that is a good example of something that fits our thesis. And more recently, we're seeing a lot of companies that are doing this when it comes to businesses purchasing large ticket items such as software or office equipment, and offering the same types of resources that have been in the space when it comes to buying shoes or electronics online, that Affirm, Klarna, and some of the other players in the space have really pioneered.
Very interesting. Yep. And sorry to go down a rabbit hole, but I'm very interested in that tech. So it's kind of neat to to learn about what you're finding out there. What are you typically looking for from a company that you're investing in? What's the criteria? Is it about the founders? Is it about the technology? What's kind of your sweet spot, or what are the things you're interested in?
Sure. So a lot of what we've seen has not been people trying to take different approaches on the technology side. You definitely have to know the market, and some of the founders that we've have worked at legacy financial institutions, for instance, and then built their own products using certain innovations such as Plaid, for instance, which wasn't around when they started
True.
at the companies, and APIs, et cetera, to build more efficient software to execute transactions that have been around for a long time. So it's less so on the technology innovation, but more so on how people are thinking about using existing resources that have come into mass scale recently, is really how we look at it. So that's kind of one of the aspects. Because it's a highly regulated space, a lot of what we look at is the founder's domain expertise and knowledge. And honestly, at the stage we invest in, there's little data to show how successful the companies are going to be. So we really look at what homework and how truly passionate they are about the ideas that they're bringing to the table. And when it comes to financial services, specifically on the product side, for instance, we'll take buy now, pay later as another example. There's not too much you can do in terms of innovating on the products because of the regulations. For instance, you can't, in certain states, given certain dollar sizes, charge more than 36% on a loan, or depending on the size of that loan, higher in terms of APRs. But there's little in terms of innovating on the product and choices that you can do given the federal and state by state regulations. So it's really about seeing how people have unique insights into acquiring customers, or some of the other areas of fintech that really make founders set themselves apart. So we're kind of looking at some of the more intangible factors that are more behind the scenes than what people typically see when they're checking out on a web interface, for instance.
Makes sense. If you could offer founders out there only one piece of advice, what would that advice be?
I'd say there's one way to look at flexibility, and that is sticking to your mission without deviating too much, especially at the early stages. And so that's a very generalized way of saying you have to be confident in your idea. You have to be flexible in terms of taking other people's feedback and digesting that and interpreting it. But that doesn't also mean that you try every idea that someone suggests to you. And that doesn't mean that you always try, the same idea in perpetuity as well. And so when I say that, it means being confident in what you're doing and trying to, assess all factors to make decisions outside of a vacuum. I think for us, I mean, we give kind of 12 to 18 months to certain ideas to see if they can take hold. And, it really depends on the subsector of fintech. But when you think about the best entrepreneurs that we back, they're really able to stick to their core mission and not deviate from it, but also be able to interpret, signs that are coming into their own business in terms of customers, tractions, revenues, et cetera, but also being able to, think about other ideas if what they've really come out with doesn't work. So that's important. And it kind of means two different things when it comes to fintech specifically.
That's great advice. What is the role of either partnerships or community been in your success?
So, because of what we do, which is highly specialized when it comes to fintech and insurtech and specific areas within those two fields, has been very important. And for us, building a highly specialized network, which has come from spending careers in financial services, myself and my partner, it's been especially important to what we're doing. And, it's brought us most of the deals that we've done in terms of the 20 we've done for our fund. So I'd say it's important specifically for specialized verticals as well. But that means really opening yourself up to different conversations and different points of view from within, the financial services and insurtech industries as well. And so, in my view, even if I have certain beliefs and ways of doing things, I'm always looking to talk to people that have opposite viewpoints of what I'm looking at. And I really seek those people out when it comes to my community and my network currently.
I love it. That is great to hear. Well, I do want to be conscious of your time. First, I want to thank you for spending so much time with us. And I'm really interested in the space. So we want to keep an eye on some of the companies you're working with and what you guys are doing. So we're excited about that. What is the best way for people to get in touch with you, Lucas?
Via LinkedIn is probably one of the better ways. And that is where I am most active and can kind of do my homework on what you're building aside from the message that you send me. So I'm pretty open to connect there and suggest you reach out if you're building something pre-seed, seed within fintech and insurtech.
That's awesome. I do want to invite you before I wrap up. We just launched Intros by Founders Pack, and basically what it is, it's a weekly matchmaking service. It's run by machine learning based upon criteria that you enter. So all the members of Founders Pack are founders or investors. So I want to send you an invite to that if you're interested in it, that you can participate in that. We look forward to maybe having you meet some other founders or investors.
Sounds great.
Super. The final thing is, when we have interesting people on the podcast, we like you to nominate other interesting people. So we, as you know, deal with either founders or investors in scalable startups. So who would you, Lucas, like to nominate as a future guest?
I would nominate Brian Daly at Ground Floor. He is one of our portfolio founders, but has a very interesting story, and the approach he's taking to his startup, which is a real estate debt platform, is quite interesting because he's actually opening it up to all investors to invest alongside our fund and existing shareholders via equity crowdfunding, and has been quite successful doing that. So I'd suggest reaching out to him. He's a great guy, and I think everyone would enjoy hearing his story.
Awesome. So Brian, you've been nominated as a future guest, and that's from Ground Floor. So we look forward to that introduction. Thank you, Lucas. We will look forward to following your journey.
Thank you for having me.